I've been around long enough to see excitement come and go in this business. The faces change, the technologies change, but the behavior, that never does. People still get carried away by a good story, still overpay for the illusion of certainty, and still forget that arithmetic always wins in the end. Let's talk about one of those stories making the rounds again. A once dominant company, famous in its prime, left for dead in the age of smartphones and fiber networks. For years, it's been the old relic of a past era. And suddenly, boom, one announcement, one big-name partnership, and now it's the belle of the ball again. That company is Nokia, once the king of mobile phones, now trying to reclaim relevance through the infrastructure of the digital age. Networks, 5G, and now, the glitzy world of artificial intelligence. The market just woke up to it. After a major AI player announced a billion-dollar investment and strategic partnership, Cinnamon exploded. The stock soared. Headlines called it a renaissance. Investors flooded in like it was 1,999 all over again. But here's what I want you to think about. Does a big check make a small company great again? Lesson 1. Credibility is contagious, but it doesn't compound. When a famous company invests in another, it transfers a bit of its halo. It makes people feel safer. It makes analysts optimistic. But it doesn't fix execution. It doesn't build new products. It doesn't magically create profits. A partnership can turn heads, but only performance keeps them. Right now, Nokia is selling a new story. AI infrastructure, cloud demand, network evolution. The words sound expensive, and they sell well on TV. But words don't make cash flow. What matters is whether the company can actually turn this attention into sustainable earnings. Otherwise, the billion-dollar bet is just a fancy endorsement deal. Lesson 2. Valuation is a seductress. When a stock jumps 20% in a week, people start believing the move means something. They think the price knows a secret they don't. But more often than not, price is just excitement with better lighting. If you buy at the top of enthusiasm, you're not investing. You're gambling that someone even more enthusiastic will buy from you later. And if there's one thing I've learned over the years, it's that enthusiasm burns off faster than profits accumulate. So before you pile in, ask yourself, are the margins getting better? Are the contracts longer? Are they making more money than last year? If the answers aren't clear, then the story isn't finished. It's just louder. Lesson 3. Risk is what you don't see when you're smiling. Right now, Nokia has the right buzzwords: AI, 5G, cloud, optical networks. It's riding the same narrative wave that's lifting a lot of tech names. But the fundamentals haven't caught up yet. Growth is spotty. Margins are thin. The competition is brutal. And geopolitics still lurk in the background. Supply chains, export restrictions, national networks. A single regulation or delay can cut a quarter's optimism in half. So yes, it's an interesting time for them. But the bigger the promise, the bigger the disappointment if things don't go perfectly. And perfection is rare, even in Silicon Valley. Lesson 4. Patience is the last competitive advantage. If you're betting on this turnaround, make it a long game. Forget the next quarter. Forget the next tweet. This is a story that plays out over years, not headlines. The company might grow into its valuation, or it might stumble and retreat back into the shadows. Either way, real progress takes time, and anyone looking for a quick flip is likely to end up holding the bag. Investing isn't about guessing which company gets the next billion-dollar deal. It's about asking who will still be earning profits when the applause stops. So here's my take. There's nothing wrong with optimism. Optimism drives innovation. But optimism without skepticism is just delusion in a tuxedo. The trick is to balance hope with math and story with patience. Nokia might be on the edge of something big, or it might be replaying a very old tune on a new instrument. If you're going to buy in, do it for the right reasons. Don't chase a headline. Don't chase a partnership. Chase competence. Chase execution. Chase the kind of management that thinks in decades, not days. Because in the long run, it's not the flashy announcements that make money. It's the companies that quietly deliver on boring fundamentals quarter after quarter. The ones that don't need a billionaire investor to make people notice them. So stay rational. Stay disciplined. And remember, The market always comes back to the arithmetic. It just takes the emotional crowd a while to remember how to count.